All right. We are just about ready to get rolling. I'm just moving the screens around. So a little bit of housekeeping first before we really kick into this. Right down below, you'll all see the chat button. We're going to be using that. We're also going to be using the Q&A, and we're going to really get into this and involve you. But first off, I want to thank all of you for being here. We're going to probably have a lot more people joining us. You know, a lot of people love to start these things late. We're 5 minutes after, and all of you that showed up, it's your time. So we're not going to make you wait any longer, and we're going to just get right into this. And with that being said, let me ask all of you a question. And I want everybody tonight just to know one thing. I want you to participate. You know, it's one thing to get knowledge, but it's another thing to actually apply that knowledge. So throughout the entire night, I want all of you to commit to something. Can you all do that? Say I. Say I. All right. Here's what you're going to do. We're going to be asking a lot of questions. I want to check your knowledge. Participate and add, just chime in on the chat. If you have questions as we're going, if there's something we hit that you don't understand, message us. We are watching, we are here for you, and we're here to teach you how to take back control of your money. And how many of you ever wanted more money for pretty much anything at all? Say I. Let's see how many of you want more money for pretty much anything at all. I know I got you guys saying I, and I got one person that did AYE. You see that, Stephen?
Yeah, man.
One person. I remember we used to do this from stage, and it was always I, AYE. That's good news. You are all in the right place. My name's Chris Naugle, and I'm here with my partner in crime, Stephen Nagy, and we are going to show you today, we're going to show you how to generate more money for your family. We're going to show you how to generate more money for your lifestyle, more money for your retirement, more money for the real estate deals you want to do. And we're also going to show you how to create a legacy. Now, this is the number 2 on this preview. We're doing 4 of these, but this is the second one. And tonight, I feel like we're going to rock your world. We're going to really show you some of the things that I learned that are literally pivotal in you changing that dynamic right there. We're going to show you 3 wealth strategies tonight. 3 wealth strategies that you can apply. You don't need an advanced degree in finance to understand what we're going to show. All you need to do is listen, learn, and apply what you learn in your life. And that sounds easy, right? How many of you like the sound of that? Great. Well, I always like doing a little thing. Stephen, you want to pop up your slide real quick?
Absolutely.
I always like doing a little demonstration. Now, doing this live, it was always a little bit easier than doing it in front of a virtual class, but we're going to give this a whirl. Can you guys participate in this? What I need roughly 5% of the attendees here. Now, 270 people registered for this event. I want you all to remember that 217 or 270, I think it's actually more. We'll just go with that. 270 people registered for this event tonight. And out of those 270, only 5% of them, only 5% are here. So if we did the math, roughly 5% of everybody that's here, you got to do the other screens too. 5% are the ones that are here. Now, let me ask this. How many of you feel like the 5%ers? Just say yes. You guys feel like the 5%ers here? Well, here's the deal. You are the 5%. The other 95%, even the other 95% that registered, they're not here. They're mowing their lawn. They're out doing something else because they felt that was more important. But all of you, you're the 5%. And the funniest thing is according to the Social Security Administration, let's get down to statistics. According to the Social Security Administration, out of 100 people, only 5 of them will be financially secure at the age of retirement. And we have a slide we'll show on that. Only 5 out of 100 will be financially secure at the age of retirement. Think about that. Seriously, think about that for just 1 second. Isn't this the United States of America? The land of opportunity, the greatest country on earth. How in the hell can that be? How can it be that out of 100 people, only 5 of them in this country are going to be financially secure? I see a problem in that. How many of you see a big problem in that? Because here's what I see. I see a lot of 65, 75, and 85-year-olds working into retirement, not because they want to, but because they have to. And I got good news for all of you. Before any of you start thinking about, oh my gosh, or getting discouraged or thinking, oh, I don't want to be, working till 65, 75, 85. The good news is you're the 5%. That's not you. Because all of you, there's a big difference. There's a difference in all of you, the 5%. You showed up. And because you showed up, that makes you different than all of them. It shows us that you're willing to invest your time. Sometimes you're willing to invest your money. You're willing to invest those things to learn something new. And that something new can set you free. How many of you are ready to learn some serious 5% stuff right now? Say, I'm ready. Type in, I am ready right now. How many of you are ready for some serious 5% stuff? Because that's what we got for you. Stephen and I are really going to teach you these 3 wealth strategies. And I think these 3, outside of all the other ones that we're going to show, which are all good, these 3 can be applied by every single one of you. So Stephen, are you ready to rock?
Yes, sir.
All right, let's get into this. Now, let's go to that Social Security slide real quick. Go one more here. I want you to all go back to what I said about that. Out of 100 people, 1 will be wealthy, 4 will be financially secure, 5 will continue working, 36 will be dead, or I like to call, if you die, I like to call it graduated. 36 will be graduated, and 54 will be dead broke. Now, we changed the wording, but this is statistics right from the Social Security Administration. So here's how I want to open this up. I want to open this up that if all of you went out, there's a study that was done, okay? And they took 100 20-year-olds and they went around and they asked 100 20-year-olds if they're going to be financially secure at the age of retirement. What does everybody think those 20-year-olds said to that question? If you ask a 20-year-old, are you going to be successful at the age of at the age of 65? What do you think they'd say? That's right. Deborah said yes. Anna said, I'm ready. Mark said, I'm ready. Who else thinks they would say yes? Is there anyone that thinks that 20-year-old would say, no, I'm not going to be successful? Absolutely. Connor said yes. Who else? Okay, Steven said easy. Yeah, that's exactly what they'd say. Are you kidding me? Of course I'm going to be successful. So as you listen to this, I want you to comment in. No problem is what Daryl said. No problem. I'll be successful. I'll be a multimillionaire, a billionaire. Leroy said no problem. Same thing. But here's the fact. Something happened from that time that 20-year-old went from 20 to 65. Because I just showed you the statistics on that, right from Social Security, that out of those 120-year-olds, only 5 of them are going to be financially secure. And now we're going to talk about the whys today. We're going to talk about why those 5 are financially secure. But I'm going to lay it out to you right here. And I want to know right here and now, I want all of you to participate in this. You have to pick a side. The 5 people that I just mentioned, those 5 20-year-olds that are going to be financially secure, they did one thing different than the other 95. Can anyone tell me what they did different? I say this all the time. Let's see how many of you are paying attention and getting around the campfire. How many of you can tell me what those 5 did different than the other 95? Can anyone get that right? Paid themselves first. Okay, that's Daryl. What else? Oh, Daryl said become the bank. Will said pay themselves first. Take action. Leroy said pay themselves first. Okay, these people commenting have been around our campfire for a little bit.
Oh, by the way, Chris, real fast, I want to make sure that everybody can see the responses. So if everybody could real fast in the chat box, right above where you're typing, where it says 2 with the little blue, area there, click on that and select where it says panelists and attendees. And that way everybody can see your responses. Because Connor, Mark, Leroy, you guys are only sharing with Chris and I, but we want everybody to see the responses. So if everybody can make sure that they do that, please, real fast.
Yeah, so just make sure it says all panelists and attendees, because everybody watching, they can't see if you're just telling us. Like we can talk all the time on the phone, but let's really let everybody know what this is. Third side of the coin, the IBC concept, which is the infinite banking concept. Deborah said, pay themselves first and become their own bank. I love these answers, but let me make it super simple for you. Here's what the 5 did different than the other 95. They created their financial future. They created their financial destiny. What did the other 95% do? They conformed. So the difference between the 5 and the 95 is creation versus conformity. I want to ask all of you right now, I want you to draw a line in the sand. Before we get into this, you have to do this. I need to know who is ready to create. If you are a creator, put the number 1 in the chat right now. Make sure it says all panelists and attendees. Number 1, who's ready to create? How many of you are creators? Good. Every single one of you, my 5 percenters, you should all be putting number 1 right there. Pioneer. Listen to that. Look at, I said put number 1 and Connor comes out and says, I'm a pioneer. Numero uno. I love it. Every one of you are a number 1. Every one of you are creators, because the other 95%, they're not here. They're the ones that conform to what everybody tells them their life should look like, to everything else they've been taught. And what have we been taught, folks? Think about it. Your whole life, what have you been taught to do? You have been taught to trade hours for dollars. You have been taught to get a job, to create a company, but yet work in the company, still trading hours for dollars. You have been taught to give up control of your money so that somebody else is in control of your money and goes out and makes more. We need to change that, and that has to change right now. That line in the sand you just drew, that line in the sand you're visualizing in your mind, this is what has to change. You are all creators, but you need to create that financial future. So first off, we need to know what that financial future looks like. What is your perfect day? From the second you wake up to the second you go to sleep, what does your perfect day look like? Once we know what your perfect day looks like, we have to reverse engineer that and figure out, how do we live that day every day? If you're going through life aimlessly, without direction, without a purpose, without a place, without a destination, how are you going to get there? If you set a ship, a giant ship, out to sail with no captain, with no navigation, where would it go? Probably crash into rocks or land on shore. But if you put a captain and navigation behind it, it will go wherever it's told to go. Your life is no different than the ship. You need a destination. We have to figure that destination out and then just reverse engineer it. But in that reverse engineering, we need to stop listening to what everybody tells us our life should be. We need to stop listening to what everybody tells us we should be doing with our money. And we need to take back control. Because I'll tell you this, I'm sorry, I'm fired up tonight. How many of you are fired up? Say fired up. How many of you are really fired up? Because I am. I don't know where this energy came from, but here's the thing. We need to take back control. There isn't a more pivotal time in history than right now to take back control. Things are changing, folks. There's a big storm coming. And if you're not ready, if you're not taking back control of your money and actually sending your money out to work every day instead of you relying on yourself to go work, hey, listen, we're only human. We only have so much we can give. And then eventually we break down. Our money is unconditional and it will work forever. It's infinite. It can do anything you want it to do if you know how to send it to work. Well, tonight, the biggest focus for Stephen and I is we're going to teach you how to send your lazy money to work. That's what we're going to accomplish. Stephen, what are we mostly going to do? I know we talked about the last one. For some of the people on here, they missed it. For the last one, we talked about the 3 pillars of success. What are we hitting tonight?
Yeah, absolutely. So tonight we are going to get into exactly why 95% of people are not successful, on top of the fact that most people conform, like you said, and don't create. Most people are going to procrastinate. You know, when I was a financial advisor, I learned the number one reason people do not achieve their financial goals in life is actually procrastination. And it's so easy to say in life, you know what, this all sounds really cool, but I'm really busy and summer's coming up, so I'll just get started with it later this summer. Or, hey, you know what, I'm really, COVID is just ending and I'm kind of getting back to life. So I just need to concentrate on what I'm doing and I'll just start next year and get my finances in order next year. But then what happens? Life gets in the way, right? And all of a sudden you're looking back and you're like, man. So we're going to make sure that you understand the importance of what's going on right now in this country, in this world today, and why you need to understand how to take back control of your money and what to do with it, specifically what to do with it right now to get ready for what's coming. And this stuff is time sensitive. So keep that in mind as we go. And we are going to get into why that happens, how you can protect yourself, and exactly what you're going to do from this point forward.
We're going to put that lazy money to work. My lazy money used to just sit on my couch, watching my TV, drinking my soda, and eating my potato chips while I was off working. I had to change that. I changed one thing, and I put that lazy money to work. How many of you want to put your lazy money to work so you get paychecks every month in the mail? How many of you want to make money while you sleep? Say yes. Every one of you. I better see, damn it, I better see 36 right now. Actually, no, we got more than that. I better see a whole lot of yeses. No, there's way more of you than that. That's right. That's right. Hell yes is even better. We all want to make money while we sleep, but we got to learn how to do that, because our whole lives, we haven't been taught how to do that. We've been taught how to pay other people checks while they sleep. Everybody else is getting the check and we're out there working. It's got to change. So it's got to change. Stephen, what is Warren Buffett saying here?
You see it, man. If you don't find a way to make money while you sleep, you'll work until you die.
You know, it's funny. I totally forgot about this slide, or I'm just so used to seeing it. It just kind of just is part of me. Like, that's a great slide. That's Warren Buffett. Okay.
Well, look at this. What you were saying earlier about dreaming it, being a creator, not a conformer. Walt Disney himself.
If you can dream it, you can do it. Walt Disney World created by this man right here during pretty much one of the worst economic periods of time in history. You want to know how he did it? We're going to get into that.
And that's what money school is all about. We study what the wealthy do. We mimic what the wealthy do. That's exactly, we take strategies, we study history, and we learn from it, and we implement and learn strategies and techniques that every single person can and should be doing right away. And that's what this is all about.
Absolutely. And the best part about this, all of you can do this. I don't care what your financial knowledge is. I don't care if you've got, not education in finance, or if you're in business, or if you're working for somebody else. It doesn't matter where you're at. I don't care if you're struggling every single month just to make ends meet. There's hope. We've changed thousands of people's lives that were just like you. But then some of you probably have lots of money just sitting there lazy, and you just don't know what to do with your money. You're scared, or something deep inside. How many of you follow your gut, right? How many of you actually follow your gut when it just doesn't feel right? Do you actually listen, or do you just do because you're like, wow, I'm not going to listen to my gut? I've not listened to my gut a lot of times, and every time ended poorly. Something just doesn't smell right out there, right? Stephen, does it look like, what's going on out there? Like, the stock market's booming. You got the real estate market just literally going straight up. I don't care where you're at. I live in Buffalo, New York, folks. No, ain't nobody wanting to live in Buffalo, New York. I'm just going to put it that way. Like, there's not much here. It's beautiful in the summer. In the winter, we get 4 to 6 feet of snow. So if you are not skiing or snowboarding, don't come to Buffalo. And our real estate values are skyrocketing. I was in here today. Somebody said they just got an offer on a property, $80,000 over ask on a $240,000 property. It was like a 30% increase. That's what's going on here in Buffalo. Buffalo, where not many people want to live here. What part of the country are you in? What part of the world are you in? Are you Hawaii? People want to live in Hawaii. California, maybe not right now, but people still love the beach. Florida, forget about it. So if all this is happening and it just keeps going straight up, and Bitcoin, Bitcoin's either up 50 or 100% or down 50 or 100%. If you like the roller coaster ride, well, be my guest. I'm investing in it, but very strategically. But we're not going to get into Bitcoin, and we're not going to talk about the stock market tonight. But I want you to look around, and I want you to see everything that's happening. I want you to ask yourself, can this continue? Really, how many of you think this continue? If you think this can continue for, I don't know, let's put a time frame. How many of you think this bull run, this bubble, can continue for 5 years? Put yes. How many of you think it can't? Put no. Okay, we got no, no way, no. There's got to be someone that thinks this can continue. Everything that goes up must come down. All tides rise. Connor's got a date. 2022. Okay. No. Okay. So if something doesn't feel right, and we got just about everybody putting in here, some people are specific with dates. If something doesn't feel right, we have to get ready for the storm. So how do we help them get ready right now?
Let's go.
Yeah, I was putting it on you. Let's go. Let's go. We got a slide that says why. Well, how is what I like to say. How is what we're going to get into, but the why is what we really have to talk about. And that is, why do so many people have their lazy money sitting around?
And these are the three killers, the three killers of of why, the 95%, everything kind of goes together. But like we said, I mean, here we go. So number one, Chris, do we want to get into this right now?
Yeah, let's hit it.
What am I doing? There we go. I mean, if you've been watching the news lately and following anything with the economy, I think that inflation, we should start there, Chris.
I think so too. It's a huge thing. Just today, it's so relevant. What did Yellen say today in the news? I don't care what news channel you watch. She was on them all. What did she say? They're going to keep printing money, right? How much money are they going to print? What did they just approve today? How much was it, Stephen?
Well, there's some proposals out there. We'll see. I know there's a $6 trillion proposal for the budget this year. There's already been $6 trillion in spending packages proposed this year. So we got a lot of money going out right now.
Yeah. So basically, to put it into perspective, right now we're at about 5 trillion, give or take a few hundred billion. It's so funny to say that. We're at 5 trillion, give or take a couple hundred billion. But the proposed plans take us up to over $9 trillion. Does everybody understand what happens when the government prints money? Oh, if you don't, I'm going to explain that. But let me first explain what happened in Germany. Back in the early 1900s, about 1923 to be pretty specific, in Germany, the banks were printing crazy amounts of money. And it actually got so bad because of just rampant inflation that people would get paid daily. They couldn't get paid weekly, biweekly, monthly. Holy crap. Like, they didn't know if the money was going to be worth anything the next day. So here's the other thing. Back then, they would get paid daily, and they got a break after they got paid of 30 minutes. Do you know what that break was for? So they could rush out and spend that money at the market or somewhere else before it's worthless. I want you to think about that. I'm not saying that's going to happen here. Listen, the US dollar, the almighty greenback I'm holding right here, it's still the nicest house in a shitty neighborhood. Excuse my language, but that's the only way to put it. So the US dollar isn't going anywhere anytime soon, but they sure are trying very hard to create massive inflation. And a lot of people don't understand inflation. They're like, oh, milk went up in cost. No, your dollars went down in value. You see, inflation is not that goods and services go up. Inflation means that your dollars get weaker and it takes more of them to buy the goods and service that you buy. Gas, bread, milk, cars, housing, all of these things are all assets we buy. And if our dollars, after $9 or $5 or $3 or $9 trillion of printing, every time they print a dollar, it steals some of your current dollars. So your dollars are worth the most today. They will never be worth more in the future. They're worth the most today. But yet, what do we do with today's dollars? We give up control. Number one enemy, more now, pretty much than any other time, maybe not more than the 80s, but we might get there, is inflation. Inflation. And if you don't understand that, all you need to understand is what it says. It's the same as going broke slowly. Keep your money in the bank. Park your money in those CDs where they tell them to put it. Put your money somewhere where it's supposed to earn a guaranteed rate, where it's not above the inflation rate, and watch how fast your wealth depletes itself without you doing anything to do that. It just vanishes right from underneath you. This is a problem that we all need to be aware of, and it's a tricky one, because if I'm a betting man, and based on the economists that I study and the trends I study, inflation is going to be a short-term problem. Well, that's good news. But why does the government want inflation? Stephen, I got to hit this one. Why does the government want to keep printing money and drive inflation? Because when the dollars become weaker, can't the US government pay debt back at a lower price? Think about that. If they devalue the dollar, they get to pay back their debts. Pennies on the dollar, 30 cents on the dollar, 50 cents on the dollar. You see what I'm saying? This is what the government wants. You know what you want? Deflation. Deflation doesn't feel good. Deflation is when everything's going down. You also have been through deflation. You were in deflation last year. Okay. During COVID, you were in deflation back in 2009, 10, 11. I'm just trying to give you mindset things to kind of picture what that looked like. It's when the price of everything goes down. Don't you want deflation? Don't you want real estate to be able to be bought cheaper than it is? Stocks to be able to be bought cheaper than it is? Heck, Bitcoin to be able to be bought cheaper than it is today? Absolutely. Does the government want that? Absolutely not. So we have to understand inflation, but we also have to understand that and this is speculation, but I think inflation will be short-lived this time. What's next, Stephen?
Yeah. And I mean, just to add to that for a second, I mean, we're told, back to the 95% and 5%, I mean, we're told to save like our whole life, put your money in a savings account, put the money in the banks, put your money into these safe vehicles. And it just doesn't work. And I mean, there's so much better ways. And that's what we're going to show you is there is a better way to get guaranteed strong returns on your money, still control it and still have access to be able to use it at all times. It's crazy what we're told. And just looking statistically speaking, like, why do people still doing the same thing over and over? What's that quote? Doing the same thing over and over and expecting a different result. It's the definition of insanity, right? But it's been going on now for decades and decades. So we just need to make that change. And it goes right into enemy number 2, which is volatility. And you can hit that probably better than anybody, Chris, showing the markets how they go up and down. But I mean, Warren Buffett said it best, right? Buy low, sell low, and don't lose money. So
now, buy low, sell high. We got to sell high, not sell low.
But yeah. Buy low, sell high.
Absolutely. Buy low, sell high, and don't lose money. And what are most people doing right now? Buying. I see people plowing money. Maybe not any of you 5%ers, but I see people plowing money into the stock market right now, into crypto right now, when the markets are really high. Now, I'm not saying crypto doesn't have legs and doesn't have the ability to go much higher. I think it truly does. But I think crypto right now is really following the market, or is the market following crypto? We haven't quite been able to figure that out. We're doing studies and charting on that, but we need to really think about that. So if volatility is the movement of the markets up, down, up, down, up, down, you need to decide, do you want to ride the roller coaster? Are you willing and able to accept the risks and the losses and to ride that thing called the drawdown effect, which means if you lose 30, you got to make 43, just get back the 30 you lost. Volatility is something that will wipe a lot of people out. It did last year. It did in 2008. It did in the dot-com crash. I can go all the way back to the Great Depression, which is all I study from Great Depression forward. The volatility is an animal. It'll eat your money up. How many of you have gone through a recession or depression? I don't know if there's any depressioners here, but how many of you have gone through a recessionary period or where the markets have fallen and actually, like, how many of you stayed in the market? Just say yes. Like during those recessionary periods, 2008, let's just fine tune it to that one. How many of you kept all of your money invested straight through 2008? Put yes. I want to see how many actually did this. There's got to be some of you. No one kept their money invested through 2001. Deborah, come on, there's got to be more than one. We got a lot of people on here. Okay. Roy did not. Okay. Who else? Who kept their money invested? And make sure you guys comment on this because it's interesting. Yeah. I was in middle school. I forgot about that. Stephen, I'm showing my age. I was a financial advisor during 2008, but you know what? I'm getting old, and there's a lot of people that don't even remember the Great Recession of 2008. They were in school. Volatility is good for momentum investors. Absolutely correct. But we have to understand how to do that. What's the third killer?
The third killer, and then the other thing, volatility, real fast before we move on, is I'm just curious if anybody on here right now, and if you are, let me know, if you're retirement age now, relying on a retirement account or the markets, or if you're approaching retirement within the next, let's say 5 to 7 years. Because those of you that are in retirement now or approaching retirement age, you really, really, really need to pay attention to this, because what happens when you have these great looking retirement accounts right now, and let's just say that shit does hit the fan and the markets do drop, let's say 50%, 30%, whatever the case might be, your beautiful looking retirement account's going to do what? And if you need that money, if that happens right when you're going to retirement, what's going to happen? your retirement's not going to be there. And the only reason I bring that up is because I saw it happen to so many people in 2008. I mean, I was an advisor in 06, 07 leading into 2008, and I saw people going through this, and it's crazy. So you're the ones that really need to pay close attention, how you can start positioning yourself to overcome and hedge against that and protect your money, because you don't have to lose it. You don't have to one bit. You just got to stop listening what you've always been told and learn something new. So
well said, man. Well said.
We'll move on to enemy number 3, because this one is another very, very hot topic right now. I can figure out, here we go. Taxes.
Beyond hot topic. How many of you think taxes are going down? Anyone? Does anyone think taxes are going down or staying the same? Anyone? Nope. I think we all know taxes are going one direction, up. And I don't care, I know they've got us believing that taxes are going up for anyone that makes 400,000, but let me put this into perspective. People that make 400,000 or more are usually the creators, okay? And normally they're creating jobs. And if they're creating jobs, they're creating products and all sorts of other things. And I'm not trying to pigeonhole the 400,000 and ups, but if their taxes go up, what do the goods and services that they create do? Don't they go up in price? So I know it's not a tax, but if you're paying more for goods and services because you're taxing the as they call it, the wealthy, which I get it, the wealthy do need to pay more taxes, but what they're doing and how they're doing it is going to be catastrophic. But in doing that, you're going to drive the price up for everything, which is going to make it even harder for the people that, they say your taxes aren't going up, for them to be able to afford to live. You're already seeing it. So this tax increase to fund infrastructure and all this stuff, yes, we need all these things, but there's better ways to do it than to literally just come out and steamroll everybody. But hey, you know what? Every administration, I don't care if it was Trump or I don't care if it was Biden, I'm not political at all, but every administration has 4 years to make their mark. And this is one of the big things they're doing. So we're going to see what happens with this. And my hope for every one of you is that you are above that 400,000 mark, because that's awesome. But if you're not, listen, I'm going to help get you there. Stephen and I are going to help get you there. All right. So those are the killers. What else do we got, Stephen? Keep those things going. Cause we got to get into hidden equity. Yeah. A lot of people right now have some unique opportunities going with hidden equity, where that money is just literally sitting there for a lot of people. And a lot of people don't know how to move that hidden equity. How many of you know that you have hidden equity sitting somewhere? Maybe that somewhere is hidden equity sitting in a 401k, hidden equity sitting in your home, your house, your primary residence, or home equity or equity sitting in your rental properties. How many of you have equity sitting out there? Okay. In my house. Yeah. So listen, like my house, everybody's correct. A lot of people have equity sitting in their house because why? Well, because real estate's been crazy. It's been absolutely crazy. So we need to figure out how to solve the problem. And here's the problem. Yeah, every one of you, I hope, have read Robert Kiyosaki's book, Rich Dad or Poor Dad. And in that book, he defines liabilities and assets. And how do you change a liability into an asset? Your primary residence is a liability. True or true? It's a liability. It always has been, it always will be, because it costs you money. But you can turn your liability into an asset. And how do you do that? Can anyone tell me how you turn your liability, your house right there, looking on the screen, into an asset? How do you do that? How do you make a liability an asset? The banks do this every single day, but I want to see how many of you can tell me how you turn a liability into an asset. That's right. Daryl said, get cash flow from it. Has to pay your mailbox money. Invest equity, okay, which would be passive income. Use it. What was that? Use the money to buy cash flowing assets. You all got it. So you see, every one of you have read the book. You all understand that your house is a liability until you change the dynamic of your house. So talk about a bank. How does a bank take a liability, which is your deposits in a traditional bank? How do they turn that liability into an asset? Very simple. They lend it out to somebody else. They move that money. We're not going to talk about that, but we are going to talk about this pretty little cape. That's kind of a cape. I mean, it's just a house, a little blue house with a red door right here. Now, this is not the house I grew up in, but let me just tell all of you a story because this will set the stage for where we're going. I grew up in a 700 square foot house. It had 2 bedrooms, 1 bathroom, and about 1.5 acres. That was the best part about it. That's my mom's house. And I grew up there my whole life. My mom struggled to keep that house there. She did. She struggled. Now, that's not much of a house. I can't remember what she paid for it, but it doesn't matter. Now, later on in my life, I had a dream, and that was to open a store. And at that point in time, my mother had been working really hard over 20 some years to pay that mortgage down, and she had equity in that house. Now, don't do this. I'm not telling you to do this, but what my mom did is my mom put her house, the equity in her house, up as collateral so that her son could chase his dream and open Fat Man board shops. I was 17 years old, turning 18 actually. And I opened that store, and my mom's house was on the line. Now, don't do that, but I want to kind of walk you through. That's something my mother did, so that I could live my dream and chase that dream. And I never lost the house, thank God. I could have very easily. I mean, skateboard, snowboard shops back in 1994 weren't exactly a popular thing, and I easily could have failed. But after that, when I got into real estate, I started realizing something. I started working with some really good mentors. And those mentors started saying things to me like, do you have equity in your house? Why is that equity not out there working? And I started thinking about it, and I started thinking about my mom. I had paid that loan off for that store. So my mom had about $70,000 in equity. Okay. Now she has 70 grand in equity, and she's excited about that. How many of you know somebody that's excited because they have equity in their house right now? Say I. People all the time brag. Oh, I've got tons of equity. Oh my God, my house is, Zillow said my house went from $200,000 to $800,000. I got a ton of equity. How many times do you hear that? Heck, I've even been in, Stephen, like you might have had this. I've even been invited to parties where people pay their house off, like a house payoff party. I show up for the beer and the food, but and I go up to the owner and I always say to them, I say, hey, listen, can I ask you a question? You paid your house off. Congratulations. Shake their hand, pat them on the shoulder and say, what has changed in your life? Oh, well, I don't have a mortgage payment. Yeah, no, I know. But what else has changed? Like, are you able to pay your car payments, with the equity in your house, that you got now? Are you taking more vacations? Are you and the wifey going on more vacations? No, I just got equity in my house. I don't have a mortgage payment. Here's your sign. You guys ever remember that comedian? Like, here's your sign. I felt like giving them, here's your sign. Like, here's the thing. When my mom had this equity, I started figuring it out. I said, that equity isn't changing my mom's life. That equity in your house, the money sitting in your rafters that we're so excited and proud about, is doing nothing to help you live a better life. It's not doing you anything better, and it's not doing your neighbor anything better, your friends, your family, your coworkers. It's not helping any of them. It's just a fictitious number on a piece of paper or on a website called Zillow that someday will probably vanish because the market moves down. That's what will happen. But now let's just say we understand that we have equity and we need to make that equity work. What can we do with that? Well, here's what I did with my mom. My mom, we took $50,000, a home equity line of credit. Steven, do we have that example on here of my mom's?
We do. And before we get on there, how many people do you know that are like, I'm doing everything I can to put all my money towards paying off my mortgage so I get rid of that mortgage? I just had this conversation with a friend like a week ago. He's putting like all this money. I'm like, hold on, let's think about this for a minute. Once the mortgage is gone, like you were saying, then what? You still have insurance on the home, right? You still have property taxes on the home. You still have an electric bill. You still have water and sewer bills. You still have maintenance. You still have upkeep. Your 2.6% mortgage is like the least expensive part about owning your home. So why are you dumping all of your money into that? And so we started talking about maybe we could take some of that and put that other places to generate passive income that's then going to be able to use for other things to start eliminating other bills. And we started laying it out. It's just little things like that, but just keep your mind open to things like this because there's so many better ways. I just wanted to mention that real fast. So
it's important. So here's what I got really good at doing, right? So this is just napkin. I want you to envision you're sitting down with somebody and all you've got in front of you is a pen and a napkin. I used to do this all the time as an advisor and a real estate investor, but this is my mom's example, right? And I'm going to round it up to $100 grand for simple math. Let's just say my mom had $100,000 in her home equity line of credit. Now, she's got a home equity line of credit. Does it cost her any money to apply and have that home equity line of credit? Does it cost her anything? In most cases, no. Most banks don't even charge you for the appraisal. They want these things so bad, they don't even charge you for an appraisal. That should tell you something right there. So most of you and anyone you know can get a home equity line of credit, and it's usually a zero-sum game for them. No money out of pocket. Okay, so you can get a home equity line of credit, but if you have that home equity line of credit, does it cost you anything if you don't use the money? No. The only time your home equity line of credit costs you money is when you take money out. So let's just pretend that I think people are silly if they don't have a home equity line of credit. Now, someone mentioned a company called Quantum RE. We teach this in the 3-day training. Okay, we have Matthew, who's the owner of Quantum RE, come in and talk about it. So what are the negatives of a home equity line of credit through your bank? Number one, you got to qualify for it. Okay, that's a negative. Number two, if you use the money, don't you have to pay interest? Yeah, look at the screen. $100,000 loan from your home equity line of credit. Let's just pretend it costs 5%. Now, I know right now you can get them lower than 5, but my mom's is actually 5. So it would cost her $5,000 to use that $100, and it'd be $416.67 a month. So a lot of people don't like that. Well, if I use the money, I got another monthly payment. Now I got another loan that I got to pay back. I'm trying to get out of that, man. Why would I get a home equity line of credit? How many of you think that way? Do any of you think that way? Like if you take a home equity line and you use the money, how many of you all of a sudden go into panic mode because now you got a new debt and a new monthly payment? Quantum RE, which we're not going to get into it today, but Quantum RE is a company of private investors. Okay. And they're not the only ones that do this, but they're good. They're doing what's called home equity agreements. Now imagine a home equity line of credit that you'd never have to pay anything back. Imagine a home, sorry, I said that wrong, that you never have to pay a monthly payment. Okay. A home equity agreement is not a home equity loan. It's an agreement between you and the investors. They give you the equity in your house. Okay. They give that to you upfront. Okay. And then you have no monthly payments and you have no debt. So what gives? Like people aren't just giving free money away. No, they're definitely not giving free money out. But what they understand is what you understand. Housing, real estate goes up in value over long periods of time. Always has, probably always will. So they understand that that property will appreciate in the future. So what they do is they share in that appreciation, that future appreciation, not today's equity, not today's values, future appreciation doesn't even exist today. Heck, they bear the risk that someday the real estate values will go down. And sometimes me and Steven talk, we're like, man, I don't know. Like, I think they're betting on something that's going to go down instead of up. But you know what? Over the long period, they know it will go up. So they're willing to give you equity in your house. Here's a check that you can use. You can do anything you want with it, which we're going to talk about what you should do with it. Here's a check, and you don't have to make a monthly payment. Oh, and by the way, there's no debt. We didn't create debt for you. It's not on your credit report. Nothing. No, nothing at all. But what do you give up? Future appreciation. You give up a percentage of your future appreciation in your house that doesn't even exist today. So someone was asking about that, and how you can get access. So Will, that's sort of the answer. Hopefully that helps you, bud. But let's just go back to the home equity line of credit, the most traditional way people know. Now, if you want to learn about what I just said, if that even intrigued you, we're going to show you how you can learn about that. But I don't have time to get into that today. So today, home equity line of credit. If my mom took $100,000 from her home equity line of credit, at 5%, it would cost her $416.67 a month. But now, if she did that to just go out there and blow it, that'd be dumb. That'd be dumb because now she's got a loan for $100,000 and she's going to keep paying for that. But what if she took that $100,000 and she found an opportunity? Let's just talk about real estate. Let's say she loaned that to her son, me. And what I did is I took that $100,000, I went and bought a property, renovated it, rented it out, and got a monthly income. And then what I did is I paid my mom back. Not 5%, but let's just say I pay my mom back at 10%. Now, I don't care if this is me and my mom, I'm just giving you an example, but what if it was my mom lending it to one of my friends, one of her coworkers, one of her, whatever, someone that she knows in her primary circle, and she charges 10%. You realize she makes $10,000 on that same 100, that's $833.33. So if we take the $833.33, this is napkin stuff. That's how much I'd be paying my mom. And she subtracts what she's got to pay the bank, which is 5%. She makes roughly $5,000 a year. That she roughly makes $416.67. Now, let me ask you this. Can $416.67 pay for your car payment? Now, all of you have different cars, but let's just ask here. How many of you want your house to pay for your car? How many of you want your primary residence to pay for your car payment? Just say yes. Any of you want your house to pay for your car payment? There we go. Yes, yes, yes. Oh, all right. I guess a lot of people don't want to make their car payments. There we go. Great. How do you do that? There's the magic formula. Put that lazy money, i.e. your equity in your house that all of you have, to work. And it can be as simple as paying for your car payment. It can be as simple as this. Let's go one step further. Let's just say you take out a home equity line of credit. I don't care. Let's call it $20,000. And you owe $20,000 in credit card debt at a rate of almost 20%. You take the $20,000 that you just borrowed from your house, okay, your equity, and you pay off your credit cards. Those credit cards were 20% interest. It cost you 5. And then you take the exact amount you were giving to the credit cards and you write that check back to your home equity line of credit every month, but you keep the difference. You only owe 5. You were paying Visa, Amex, American, all of them, Amazon, all those credit cards, 20. How much did you just make? Risk-free, a risk-free return. How much did you make? Can anyone tell me? That's right. Arbitrage. Will just said, if you're costing you 5 and you were paying 20 to the credit cards, what is your spread? How much do you get to keep risk-free? That's right. Daryl said 15%. How many of you are making 15% right now on your stocks, your mutual funds, your 401k, your investments? How many of you, sincerely, how many of you are making 15% right now? Can you say I am? Just put I. How many of you are making 15% right now on your money? Put in I. Wow, nobody. Not one person. I just showed you how to make 15% risk-free. AMC, we're not even going to go there, buddy. That is literally price manipulation like I've never seen it. I don't think that's going to continue. But I just want you to understand, like I just showed you how to make 15% risk-free by tapping the equity in your house. Now let's go one step further and then we got to move on because I go way too long on this. Let's say you don't have a house. You're listening right now and you're just about to click off because you're like, damn, he's teaching me something. I don't even have a house. This doesn't apply to me. Stop. That's a limited mindset. The biggest problem in America is not what people don't know. It's what people think they know that just ain't so. Just because you don't have a house, just because you don't have equity in your house does that mean your neighbor doesn't? Does that mean your coworker doesn't? Does that mean your friends, your family don't? They all probably do. What if you could show all of them what I just showed you on a napkin? How they could pay off their credit cards and make 15%, how they could get, take their house and pay for their car payment, or just pay their car off and then write the car payment that they're paying to BMW, Mercedes, Chevy, Jeep, whoever, that car payment. What if they made that payment back to themselves? How much would they be making? The answer is, it doesn't matter. It's more than they're making today, and it's risk-free because what they're doing is they're just leveraging lazy money that's sitting there, folks. Like all I'm trying to do is give you the path. What I just taught you is a very simple fundamental of banking. My hat says BYOB. Steven's hat says BYOB. That's all we're doing. We're being our own bank, and we're doing it with a resource that most of us have. And if you don't, somebody else does, called hidden equity in your house. And if your neighbor has hidden equity, teach your neighbor how to have his house pay for his car by funding your real estate deal. See, now it comes full circle. There's 2 people on this call tonight. There's 2 types of people. I like to call them the heads and the tails. There's people that are on the heads, which have money and they want to make more money. And there's tails, which need money to make more money. I don't care whether you're on the heads or the tails. Me and Steven just did a training about this. It doesn't matter because what you have to do, folks, is solve somebody's problem, and your problem will be solved. If you need money to make more money, great. Find somebody that has money that wants to make more money and be the edge of the coin and show them this. Go to your neighbor. Your neighbor's got equity in their house. You've got the real estate deal or whatever you were trying to do. Tell them how you will pay their car payment and then show them the path that I just showed you. Steven, what do you have to say on that?
I mean, spot on 100%. And if you don't know somebody that owns a house, do you know anybody that owns a 401k?
Oh yeah, that's a good one.
We can do the same exact thing, right?
Holy cow. But listen, this is way more fun, and I'm just trying to hit some of these questions as we go. So Stephen and I, as we're not talking, we're going to be answering your chats, answering your questions. So if you have questions, please type them in. Put them in the chat if it's just like a little quick thing, otherwise, if it's a question, please put it in the Q&A. We will hit them all. We will answer every one of your questions before we're done. So one thing I want to hit is 401ks. You just saw how equity in your house works, but some of you don't have equity. Some of you don't have a house. But how many of you know somebody that has a 401k? If you know somebody or you are that somebody that has a 401k, can you just type in 401k? And put in 401k, whether or not it's a 403b, a 457, a thrift savings plan, I don't care what it is, an employer-sponsored retirement plan, type in 401k if you have one or know somebody that has one. Well, if we give it a second, I bet what we'll find is that every single person on tonight knows or is that person that has a 401k. It just takes a little longer to type in. So we just got to give it a second. Look at that. Nicole, Leroy, Deborah, they all are typing in 401k because we all know somebody. Matter of fact, 401ks, employer-sponsored retirement plans, amount to about, what is it, $44 trillion? I think it's even more now, but $44 trillion. That's a lot of money. Heck, that's more money than the government's printing times a lot. If that much money sits in 401ks, we just lost our slide. What happened?
It's coming back. Good.
Okay. If we just lost, or if we have our 401k money, how come we don't use that money? Oh, Chris, we can't use that money because if we use it, we get taxed and then we got to pay penalties. Correct? Incorrect. And why do we even have that 401k? Like, why do we even have it? Because somebody told you that that was a good place to give up control of your money and put your money into this thing. My grandmother told me that. She said, Chris, when you get a job, make sure you ask them if they got a 401k and see if they match. And if they do, boy, that's a good job. Don't be like Grandpa and I and not put money in there. Put as much as you can into that employer-sponsored retirement plan. So what did we do? We did exactly what we were told. It's not your fault that you were giving up control. We didn't know because we were not taught to be in control of our money. That's a perfect example, the $44 trillion example of us giving up control. But is it all over if you have a 401k? No, it's not a bad thing. I'm not saying 401ks are awful. Okay. So I'm going to get to some of those questions, but just look at the math here. Let's go back to what we just did with my mom's home equity line of credit. My mom didn't have a 401k. So if you had $100,000 in your 401k, okay, and this is just simple math. I just want to be very clear and transparent. We did this slide during COVID when the CARES Act allowed you to take up to $100,000 out. We got to modify this slide because the maximum amount you can take out of your 401k is $50,000 or 50%. That's still correct, right, Stephen?
Yeah, that's correct. This would work great for a husband and wife, though.
Oh, that's true. Okay. So let's say you and your significant other both have 401ks. Each of you have up to $50,000 available. So you have a choice. You can leave the money in the market and ride the roller coaster, or you could say, you know what, I want off of the roller coaster because I'm at the top and I really don't like the look of that steep drop coming ahead, i.e. the storm. So what can you do? Well, you could withdraw the money. And if you do, you're going to pay the penalties of 10% if you're not 59.5, and you're going to pay taxes. And it's going to probably bump you into a higher tax bracket. So that doesn't sound good. But can't you take a loan from your 401k? Most of you can't. You call your HR, you call your 401k provider, and you just say, hey, can I take a loan? Oh, I can. Great. Can you run the math for me to tell me how much that loan would be over a 5-year payback? And they will do that for you. But let's just do the math. Now, these numbers are just hypothetical. I want to be clear. Your numbers will differ from this because each one's different. But if you take a loan from your 401k, you have to pay interest. You know that? Yeah. So let's just call it 5%, just like the home equity line of credit. When you take that loan, you got to pay 5% interest. Now that sucks. It's my money. Why would I have to pay interest? Well, it's just because how it is. That's just what it is. So let's just simple math, $5,000 per year on 100,000. Yours and your wife's 401k loans, $416.67 a month. Okay. Now you take that $100,000 in loans, and let's just say you loan it out to Steven here. Steven's got a great real estate deal. He bought it 60 cents on the dollar. I don't know how in this market, but he bought it, or let's just do 50 cents on the dollar. He bought it really cheap, and he's going to renovate it and turn it around, and he offers you 10% and a first secured lien. And you're just like, well, how do I, that's great. Like, I want to be the bank. So you lend Steven the $100,000 on this real estate deal. You take a first secured mortgage, and you know, at the 3-day, we'll teach you all about this stuff. You take a first secured mortgage on that property, lien position is what they call it, and you charge 10%. So what do you make? 10. So you remember the math, right? The last example, you charged 5 and you made 10, so you made a spread of 5. The arbitrage was $416.67 a month. But you realize we missed something here. In your 401k, look at the numbers on the screen. You see the interest charge on the top, the 5% interest that's being charged on that loan? Can anyone tell me who gets that interest? Who gets the 5% interest you have to repay on that 401k loan? Who gets that? Is it the 401k company or is it you? That's right. Will said you do. The rules are very simple. In a 401k, when you pay the loan back with interest, the interest goes into your account. Your 401k company doesn't keep that interest. The employer doesn't keep that. You get that. So now what you just did is, instead of making money one time, like the home equity line, and then the bank makes the rest, you just got the chance to make money 2 times. But just making money 2 times isn't even the best part. What else did you do? Well, when you took the $50,000 out from the 401k, what else did you do there? Can anyone tell me what else you did? Did you not sell high? You did. By taking the loan, it forced your 401k to sell some of those mutual funds that are high right now. So you got out high. What did Warren Buffett say earlier? Stephen mentioned this. Buy low, sell high, and don't lose money. So didn't we just do a good thing by following Warren Buffett's rules? Then we were able to make money twice, once, which is the interest you're paying back. But is that interest that cost you money, that 5%, did that cost you anything? Hell no. Stephen paid that for you. And Stephen gave you an extra $416.67 on top of the interest that was being paid back to your 401k. So now you got $416.67 to use to pay your car payment, and you're growing your 401k at pretty much not a risk-free like the other one, but a pretty low risk because it's secured growth rate of 5%. How do you like those apples? So let's just see real quick, Stephen, like, how do we, I love talking about this because this is phenomenal. And we've done this over and over and over again. I've taken loans from when I was at New York Life. I took loans from my 401k to fund rehab on the flip that I was doing. And then when I sold the flip, I paid the 401k back and I paid interest the whole way. It was great. So a lot of people are saying, one question, can you do a 401k rollover tax-free or better investment? You can roll a 401. You want to talk about that for a second? Because doesn't that lead us right into what's next?
Yeah, we could definitely get into that. I want to hit these other questions real quick too. If that's all right.
Yeah, let's do it. So Anonymous had a good question. What is
so
that?
In the early 2000s, when the real estate market was going crazy like now, people got HELOCs, as you're describing. When there was a correction, they were upside down. They could not sell without bringing money to closing, so they just walked away. Yeah, I mean, that was definitely a big problem. And one of the biggest problems with the real estate market then is a little bit different than the real estate market now. The real estate market then was driven by a lot of predatory lending. So what was happening then is basically if you could fog a mirror, you could get a loan, literally. Like you didn't have to have any proof of income. You didn't have to have a proof of a job. There was waitresses, no offense, but there was waitresses getting, loans for 5, 6, 7, 8, 9 homes. So there was a lot different stuff going on then, but your premise does hold true. So the question comes down to, are you a responsible investor or not? Because let me ask you, when money was flowing very freely back then and money was being handed out without any basically verification, what do you think people were doing with that money? Do you think anybody was going out and buying, Corvettes and Lamborghinis and blowing it on, vacations and boats and airplanes and everything else under the sun? Or do you think they were wisely investing it? Yeah, they were blowing it, right? And those are the people that got upside down. They walked away and they just left everything behind. This market's a little bit different. So HELOCs are not easy to get right now. The banks are pretty tight on restrictions. Home values are being driven up because of artificial interest rates. I'll give you that. They're low interest rates, but also just demand right now. I mean, it's, COVID really opened up a lot of people's eyes to where they can live and how they can live, and they might need bigger homes and things like that. I mean, so there's a lot of difference happening right now. And I like, so what we teach is when you take that HELOC, we're not saying to go blow that money or dump it into your home. We're saying take that HELOC and do what with it? create passive income, create additional income. So no matter what happens with the markets, it doesn't matter. When you have that HELOC out, you have that money coming in, you'll be able to. So even if we see a downturn, if you do this wisely in the right way, you're going to be fine.
Yeah. And, just on that as well. And I think he's talking about 2008, 9, 10, when the market was highly appreciated, predatory loans, the GMBs, the GMOs, all that stuff. You got to also understand one other thing. What we're talking about is not taking home equity lines of credit, which is what they were doing back then, and using it to go buy Lamborghinis. We're talking about taking the money from your equity and using that money to create an asset that pays you money, mailbox money. So again, getting back to making money while you sleep, that's what we're talking about. And in that we used a loan, to Stephen, or a loan to me from my mom. Each one of those loans has a first secured lien position. So if in that example, like, you're not going to be caught like people did back then, because people there, they fell short on what they were doing. Yes, they were using the equity in their house. Yes, it ended badly. Yes, they stopped paying for their houses. Why? Because they were foolish with the money. They weren't being an honest banker. They weren't taking money from their house, which you can consider your house the bank, and they weren't taking that money and having that money go out and work for them. Buying a Lamborghini, buying a BMW, putting a kitchen into your house, putting a bathroom in your house, building the man cave or the pool, that is not your money working for you. That is you actually, I don't want to say foolishly, because none of those things are technically foolish if that's your goal, but none of those create additional revenue. Remember, our goal is not to, take money from our house and just blow it. Our goal is to take money from the house, the hidden equity, and have that money go out there and work harder to make us more money. So there's a second thing, and we don't have time to get into all the nuts and bolts of the hows, but I assure you, we've got something coming up here in June that will teach you every step of that, which we'll get into a second. One other thing too, go ahead. Well, no, I just want to hit Audrey's. It's a good one. Are most people choosing fixed rate HELOCs or variable rate? That's a great question. And I was just typing it, but I'm going to hit it live now. It really depends. There's not a right or wrong answer to that. Either one will work. The only thing I will tell you is most people are doing variable because variable gives you a simple interest. The fixed rates typically are an amortized loan. So that means you're paying back principal and interest, which means the payment to repay your HELOC on that fixed rate is going to be higher, because you're paying back principal and interest. In this example that I gave, do we care about paying the principal back? No, I want Stephen to pay the principal back, and I want Stephen to pay the interest back too. But if I'm paying more principal and interest back, I have to wait longer to basically enjoy that money. I have to wait till Stephen pays it all back, but I suffered a little bit because I made less cash flow. The variable rates typically, and right now rates are really low, and will probably be in low interest rates for the unforeseen future. So I wouldn't worry about that. But the variable rates allows you to just do simple interest only, if you will. So now the spread that you're making, the 5 versus the 10, is higher. So you get to actually enjoy more today. And what did I say about dollars? Are they not worth more today than in the future? Yes, absolutely. I love that. Joe K said, never spend principal, only spend interest. If all of you literally would just take what Joe said and just that one fundamental thing, now it's very difficult to do, but if all of you would just find a way to take your principal, your money, the money you have, and have that money go out there and work, and then you did all the I'm saying it wrong, but all the extra stuff like going to Disney and going to vacations and all that stuff, and you used interest made on the principal to live that life, to do all those things, all of you would be fine. You wouldn't need this training. But the problem is yes, Joe probably is doing that. Otherwise he wouldn't have brought it up. It's very difficult for people to do. Pump it from the pond into the creek. I love that analogy. That's great. And then Audrey said so I'm going to get back to Audrey. She's talking about the yield shield, but let's go to the next section here, because I want to
because I want to get into what's going on right now. I mean, we've been talking a lot about the money, and you need to understand money and how to move it and how to take control of it, the opportunity. Like we've been saying, and everybody on here has been agreeing with, markets are all-time highs. The stock market, the real estate market is through the roof. And like everybody said earlier, nobody thinks that's going to continue forever, right? So at some point, there's going to be a downturn. There's going to be a time when the prices drop. And what is that for everybody on here? What is the one word that creates for us as investors, for us that are trying to build wealth? It's right on the screen. Opportunity, right? So when these markets drop, that's where the opportunity comes in. So that's what this is all about, is understanding how to hedge against inflation, how to deal with the volatility, how to handle the taxes, but also how to take action when these opportunities arise and present themselves. And the beautiful thing about real estate investing, the beautiful thing about stock market investing, the beautiful thing about understanding money and being an investor is we can make money in any kind of market. It can be an up market, we're riding it up. It can be a down market, we're selling puts and we're putting our money into safe places until it gets down towards the bottom, and then we take it and we start buying again and riding it back up. We can make money in level markets. There's ways to make money in everything that we do. And the reason that we do that is because we can create wealth multiple ways. And we teach you how to create wealth multiple ways. So we get into, real estate, multiple different types of real estate, from single family homes to multifamily to affordable housing, things like mobile home and RV parks. We get into commercial property, stocks, bonds. Chris talks a lot about treasuries even. We get into crypto. We get into buying and selling notes, which are people's mortgages. You're actually buying and selling just like the banks do. Become your own banker. We teach you how to buy vacant land, how to flip land, which is one of the hottest things in real estate investing right now. Does anybody think, with what's going on with COVID and with all these forbearance mortgages and everything that's out there, that there might be some foreclosures coming up in the next couple of years? Let me ask that. Does anybody think that the foreclosures that come up in the next couple of years are going to be more or less than happened in 2008? That's a good question. I don't know. I think it's going to be right on line. I mean, we saw a lot of foreclosures, and it was for a different reason. Now we had an artificial downturn of the economy and people are starting to recover, but we'll see what happens. There's going to be a lot of foreclosures. So understanding how to take advantage of those, understanding how to get into private funds, private loans, be the bank, things like infinite banking, all the stuff that we're going to teach you. So this is how we create and maintain wealth, is multiple streams of income in multiple different ways, multiple strategies, depending on what's going on. So I don't want to overwhelm anybody, okay? Because we do teach a lot of different subjects. And what you'll hear us say a lot from this point forward is we want you to concentrate on one or two things that you can take action on right now, right, Chris? And I'll show you exactly how we're going to do this. So we have a 3-day training coming up, okay? This is our 3-day intensive money training. So this is what we started back in the end of 2019. We started doing these classes live in 2020. COVID hit and we pivoted and started doing these virtually. So it's actually been a blessing because we've been able to really hone in and fine tune this training, bring in experts to talk to you over these 3 days. And it's just an unbelievable training, Chris.
I know how unbelievable, literally, like, not just unbelievable. Please don't think like I got an ego for saying this, but it is single-handedly the best financial education workshop in the industry. How do I know that? Because the top people doing education have told us this is the best wealth education somebody can get. It's a 3-day training all about that. It almost hurts my eyes to look at all the stuff that's there. But like Steven said, yes, is the 3-day training like drinking from a fire hose? 100%. But if you show up to the 3-day with the goal of learning one or two things and taking action on one or two things, maybe you like real estate, great. There's a lot on that. Maybe you don't like real estate. Maybe you're looking for completely passive. Maybe you're like, I'm done. I don't ever want to have another tenant in my life. Great. We have stuff for you. It doesn't matter what type of investor you are, what your needs and goals are, or what money problem you have. I can promise you this. The 3-day training will cover it, and it will cover it and give you actionable items on exactly what to do. We're talking a lot about the whys, but the 3 days, the how. Okay. Like, why is this happening? Why are we in the predicament we are now? Why is real estate booming? Why is the stock market so high? But how do you play this game? How do you prepare for the storm? The 3-day is exactly that. We have 3 full days with you, and you get all the recordings for it and a lot more, but it's June 4th, 5th, and 6th. We are going to give you the how. We're doing the now, or the why now. We're going through all the why. Next training, which is Tuesday, same great time, same great place, same link. Tuesday, we're going to go over how to be the bank. We're going to talk about privatized banking. And then at the 3-day, we're going to go deep into privatized banking and show you how to apply that in your life to solve your money problems. I don't care if it's debt, getting all the money back for all the cars you're ever going to buy, drive, and own, making a lot of money in real estate and doing private lending, whatever it is, notes, crypto, stocks. options, hedging, yield sheet. I'm going to talk about Audrey's comment here after we're done with this. Like, we're going to hit all of those. Audrey mentioned something really important that I didn't know what she meant by saying the yield shield, or the yield shield. But when she explained it, we actually teach that. We don't call it the yield shield. That's like someone else, but we teach a very similar strategy. You're going to learn that at the 3-day. I don't care if you're somebody that says, you know, Chris and Steven, I love this stuff, but I just don't want to sell my stocks. I inherited them. They're great stocks. They're strong companies. I don't want to sell them. Great. You want to learn how to hedge? You want to learn how to hedge against losses so you don't have to sell your stocks. You can just hedge. So when they go down in value, you're making money on the downward push. Wouldn't that be cool to know? How about this? You know, so I can't remember, somebody commented earlier and they said the wealthy don't, I can't remember how they worded it, but whoever commented this, please do this. What do the wealthy do with their stocks? They don't actually own their stocks. They loan their stocks out. You know, some of you are like, what the heck is that? Covered calls, folks. Warren Buffett talks about it all the time. He doesn't sell his stock. Well, he has been lately. So that's a warning sign right there. So is Bill Gates. So is Ray Dalio, but he normally doesn't sell his stocks. What he does is he hedges them and he creates an income stream through a thing called covered calls. I don't care how much knowledge you have of the stock market. You might be like, what's a stock? You could learn how to do covered calls. It's the easiest thing in the world. Own 100 shares of any stock under the sun for the most part, and you can make income off it. And you know what? The funny thing is, probably none of you, maybe 1% of you are actually doing that. All of you probably have stock or know somebody that has stock that's sitting there, and there's hidden opportunity to make an income on those stocks without doing anything. Yes. One more level of knowledge is all you need. And that's what we do at the 3-day. The 3-day covers all of that. So are we telling you that you should attend the 3-day? 100%. I think you'd be a fool not to. Sorry to put it that way, but it's that good. And if you come to the 3-day, you're not going to benefit from every single thing in the 3 days. You're going to benefit from the 2 or maybe 3 things that you showed up to learn, because all of you are different. All of you have different needs, different goals, different money problems. And you know what the good thing is? Good, because no one's the same. All of you are creators looking to create a different financial destiny. But the good news is the 3-day covers all of them for all risk levels, for all different types of things you will like. Do you have any, Stephen, what else? We've got some other things that we give them as well. Can you pull up that screen?
Yes, I was going to do that. And before I get there, because I want to go through what you're going to get with this, and then we're going to show you, because it's very, very valuable and you need to understand. But first off, I wanted to hit one question. How will we be able to meet, interact, and connect with the other folks in some way like we do at a live training? That is a big part of the reason for me when I take training sessions. And that's a great question. So what we've been able to do is we've been able to well, first off, we're going to be interacting the entire time. So our whole team is on there, the trainers, the experts that are on there. We answer questions live the whole time. So you're going to have that. We also give you all the recordings and we give you all of their contact information. So you'll receive their email, their phone number, and you'll have access to everybody that presents, myself, Chris, our entire team, and all of our experts that are presenting. You'll have all of their contact information, and they're going to encourage you to schedule calls and interact with them afterwards. So we'll be interacting throughout the whole entire 3 days. And we will also provide that to you afterwards so you can connect and continue afterwards. And then we also have a private Facebook group that we invite you into for ongoing networking and connections. So we do encourage that. And I think we're one of the only companies out there that does encourage that. And we encourage, people to talk with each other, and we encourage deals to happen. The others taking the training, same thing. I mean, everybody's on there, everybody's in our private Facebook group, and everybody interacts. It's very, very similar. So
absolutely. Where can you get the hat? Just go to chrisnaugle.com and it's right on there.
And we have students that do deals together all the time too. But before I pull up all the tools, Chris, I just wanted to give a little bit of, I had a feedback pulled up from a couple of our students. I just wanted to play one of them real fast.
Oh, please do.
That's all right
real
with
quick,
you.
while you're pulling that up, somebody asked the question, some of you aren't big investors, you're thinking, oh, this sounds great, but I'm young. I don't even remember 2008. And I just want to, I have a little bit of money and I'm willing to save money, but are there opportunities for someone like me? Myself, Steven, and our entire team have been working very hard, because we didn't have this prior, but we do now. Very hard to help people that are kind of just getting started and have small amounts. Heck, we have options now for $100 a month. We have options at $5,000, $15,000, big boy options at $15,000. That's for sure. We are trying to make it so that everyone has something. And I should say everyone, because I don't want to help everyone. I don't want to help the people that don't want help. I don't want to help the people that think they know what they don't know and you can't change their mind. So I'm here to help the people that are looking to create. And I don't care if you got $100 a month, 5,000, 15, we've got something for you in the 3-day, that's for sure.
Absolutely. So here's a couple of our students that have been rocking and rolling from taking our 3-day. And I think they've
This is a great
now
one.
attended a few of them.
Play this. Can you turn it up? Nope. Yeah, turn that sucker way up.
All right, let me hold on 1 second.
And then can you make the screen big as well?
Yes. There we go. All right, you got to click that share sound, right?
Mm-hmm.
Okay, perfect. I got it now. I'm learning, Chris. I'm learning just like you.
Yeah, there you go. John and Lori, I love them.
Entrepreneurs, we want to take action a lot of times, but we don't have the resources or the knowledge behind doing it, you know, to do it. And so when we went to the 3-day, oh my gosh, our mind just exploded, because at the 3-day, we got all the knowledge we needed to move forward. We got all the tools we needed to move forward. And then the connections that led us to going ahead and doing it was just amazing. We admire everything that you guys have done and are doing, because it's just escalated our whole life. I mean,
We were stuck.
Yeah, we were stuck.
Yep.
And I feel like we are no longer stuck. We might not be where we want to be yet, but we're going there.
Yep.
You know, and each 3-day we go to, or just like MSTV, I mean, that alone is worth its weight in gold, because the tools and you have everything right there to do anything that you want to do with. And now we're flipping land and, you know, buying real estate, and just, I don't know, it just exploded our business.
But every single one that we go to, we always take away something.
Yeah.
So it's not, I mean, you're not wasting your time.
No, or your money.
Yeah. You're always gaining something. Yes.
I mean, even if there's the same speakers, there's something different within that speaker's speech, you know?
You could just go down a different type of road of what you are actually looking for when you first walked in the door, even listen to this.
And you don't have to, you know, it's not that you have to do everything by every speaker that's there, but it sure gives you the knowledge behind a lot of different things. So you still take away stuff from the knowledge of what's going on in the different fields, even though you might not be doing them. Like, Chris has to reel me in a lot of times, because
she wants to do everything.
I had to not go to the last 3-day, because my gosh, my mind explodes each time and I want to get into something different. So it does open your mind to, like, just all the different avenues out there. And it's great, because then, you know, you get on Facebook and you're like, I'm going to friend this person, and you friend them, and then you're talking to them, and
it's grown a family.
Yeah, it just grows your whole circle, you know?
There you go. So that kind of answers the question better than I could answer the question.
Yeah, absolutely. You know, there's so many of those testimonial videos. I love, that's a new one. And, you know, the funniest thing about Lori and John is they've been around the campfire a little bit, but when they first started, like, you know, you heard John say it, they were a bloody mess. And now it's like, we literally had to, like, you know, they decided on their own. That's the only 3-day they haven't done. Now, some of you are like, well, why would somebody go to the same 3-day training every time, like multiple times? How many times have they gone? 4 or 5? Whatever it is. Like, the answer is every 3 days different. We have different speakers. We have different topics. The world's changing, and so is our education. Our education is not static. It moves with the markets. Whatever the markets are doing, whatever is going on in the economy, we're doing it. Believe me, in COVID, when it first started, everything we were teaching is different than what we're doing today. Things are different now, and things will be different in a year from now, and the training will be different as well. We have to be nimble. You have to be nimble. The world and the way money works changes, and the opportunities change. But the best thing about this, listen up, the biggest opportunity in all of your lives, I don't care how old you are or how young you are, the biggest opportunity for all of you is coming soon. And it's coming in the form of a storm that most people are scared of, but because you're in the know, because you're here today, you're the 5%, you get to take advantage of this opportunity. And how many of you wish you had a time machine, that DeLorean from Back to the Future, that you could take just back to 2009? How many of you wish you could go back there knowing what you know today? Well, what if you didn't have to go back in time? What if the same thing, maybe even worse, is coming in the next year, 2 years, maybe 3 years? And all you need to do is know, plan, and get ready and know how to play this game, and you will become a multimillionaire. And I'm not trying to make any claim to making money, but it's just factual. It's math. If you just bought in a deflationary period, I don't even care how much you bought. Look at how many multimillionaires came out of, I don't even want to say it, but Dogecoin or Bitcoin. I know one of my friends, he was a bartender. Like, how much do bartenders make? Some of you might be a bartender and you're like, I make 120 grand. Maybe he didn't. He barely, like, he made enough to have an apartment and a decent car. He bought Bitcoin many, many years ago. He told me he was buying it. I said, he's crazy. He is now a multi-millionaire. He was a bartender, folks. He bought Bitcoin with tips. Think about that. You might be the bartender. You might be the waiter. You might be the person working the menial job where you're trading hours for dollars. You might be the person that only has $5 grand and that's all you have in the world. If you know what we know and what we teach at this 3-day, you can be my friend. You literally might just be able to take advantage of the same thing he did. I said he was crazy, but you know what? I was the crazy one. I was the crazy one because back then I thought I knew what I didn't know. But the biggest problem was what I didn't know, and that's what he knew. Can you imagine if I just listened to him and just took what he said and just dabbled? $100 a month, $100 a week. Where would I be today? I'm talking about me. Like, they call me America's #1 money mentor, whatever, but like, I didn't come up with that. They call me that. Like, I would be way further ahead if I didn't have that limited mindset just a few short years ago. Where are you? Do you have a limited mindset? Are you ready to take that next step? Are you ready to get out of your comfort zone without getting uncomfortable? Listen to me. How many of you, and I want you to listen closely, how many of you are ready to get out of your comfort zone without getting uncomfortable? Say yes. I want to hear this. How many of you are ready to get out of your comfort zone without getting uncomfortable, without having to take on any risk, without having to lose control of your money, and without having to work any harder? How many of you are a yes to that? All of you need to be at the 3-day. That's all I'm telling you. All of you need to be there because that is what we're going to teach you. I don't like risk. I hate risk. Steven will tell you, like, everybody's taking risk. I'm doing the exact opposite. Like, I'm trying to find the least risky thing. I talk about treasury bonds. Come on. The most boring sons of pup investments you can get, risk-free, because they're, quote unquote, you can hold this how you want, guaranteed by the US government. They've never defaulted. They've always paid interest, but they're boring. You're buying treasuries, man? I'm buying GameStop, and I'm playing AMC, that GameStop AMC. I'm doing that today. I'm buying Bitcoin. What are you? You're buying treasuries? Here's the thing. I'm laughing at you right now. You might be making money in GameStop, AMC, and good. I'm glad. You're probably making money in Bitcoin. Good. I'm glad. I'm trying to do the same thing. But you know what I'm doing? I'm hedging it all and waiting for the big opportunity. You might be making a couple points here and there, 10, 15, maybe you made 50%. I'm not looking to make 50%, and I'm not looking for you to make 50%. I'm looking for the big play with no risk. And you know what? The treasuries are going to be that for me. You want to learn how to do that? Join us at the 3-day, and we'll show you exactly how treasuries, boring, old, guaranteed by the US government treasuries, are one of the biggest plays in the next couple of years, and nobody knows about it. Everybody's like, you're crazy. That's stupid. You're nuts. Buy gold. Okay, go buy gold. Where's gold right now? Isn't it pretty expensive? I think gold's a great investment, but right now I wouldn't buy gold. I'll buy it when it dips again. Not right now. Anyway, I'm going too deep into that. I love it. Risk management.
Exciting buying. We stand back and wait because our turn will come.
That's right. So what else do we got? Can we show them some of the things they're going to get? I know we keep talking about this. Like, you get the 3-day, great. You get us for 3 days and all of our mentors and our teachers and everybody we learned from, but they get a lot more. Can you just pull your screen up and show them some of the things they learn? And Audra, yeah. I'm giving you Steven's number to set up a call, because yes, we actually have one slot for what you're asking for. And Steven can tell you all about that or other options. And I was serious. There's only one slot for what you're asking for. One slot means one person. So Stephen, pull the screen up and let's show them what they get. I want to give them the tangible items that we give. Because you know what? How many of you like going to an event when you actually walk away with something? Yeah, we're going to get to this, but let's, God, I love that.
Well, this is something that they get. So the $1 trillion source, we didn't get to teach this tonight. We'll teach it on the next preview. But what the $1 trillion source is, and this is very, very, very powerful. This is how one of my mentors became a multi-millionaire when he started out as a young guy out of college. And this is through self-directed investing, self-directed retirement accounts. Is anybody familiar with those? Or let me ask it this way. Does anybody not know what self-directed retirement accounts are? Put I. If you do not know what a self-directed retirement account is, put I. Let's see. Everybody else knows what self-directed and retirement accounts are? All right. I guess I don't have to teach it then, Chris.
No, we got a couple.
Yeah, we got a couple. Yeah, I'm sure there's more out there too. We will.
When you're asking them to say something they don't like, they're like, yeah, I'm just going to bow out. And that's an easy thing to do in a virtual event. So there's probably a lot more that don't know.
Absolutely. So
4% that should know.
Yeah, absolutely. So first off, every single one of you that enrolls for our 3-day training, you're going to get a self-directed retirement account. The setup fee is completely waived if you go through one of our partnerships, money school partnerships with a company called Horizon Trust Company, who is a self-directed custodian. So they typically charge $350 to open an account for you and help you transfer funds or open up a brand new account. They're going to completely waive that $350 fee for you because of your relationship with us in money school. So that's the number one thing that you get. And I'll teach exactly how that works. Number two, you're going to get 30 days to MSTV. So Chris, you want to tell them a little bit about Money School TV?
Yeah, absolutely. So MSTV, Money School TV, was created last year by we came up with the idea literally at Disney while we were sitting in front of a giant ballroom that we rented and spent a lot of money to do an event just like this, and nobody showed up because of COVID. So we came up with MSTV, which is like a TV station, right? You watch the news. But what if you had a place where you could go every day, or you could tune in anytime you want, and right there in front of you, you could pick what information you want. Think of YouTube, but money specific and time specific. Think of YouTube without all the noise, without all the stupid videos you don't want to see. What if you just went somewhere to learn, what do I do if I have this money problem? What do I do if I want to make more money on my money? What do I do if I want to take less risk? What do I do if I want to do real estate? We created a community, and that's exactly what it is. Some people are asking, like, is there a community? How do I get part of that? MSTV is that. It is a community where you come in and we've got 15-minute trainings. Plus, we have a version where you can get the coaching, which is a 2-hour monthly group coaching. People love that. Or you get access to all my mentors, that I pay $100,000+ a year for. You get access to them. We bring them on all the time. But the trainings and all the information and access to our team is what you get with MSTV. So you're going to get that for free.
Yep. And there's a 6-part training inside of there also on self-directed investing. So you can really learn the ins and outs, how to use not only for yourself, but how to use self-directed investing to raise unlimited funds for all the deals you'd ever want to do in any kind of business, real estate, investment. So that's in there in MSTV. You get that right away. As soon as you enroll, we get you access into MSTV so you can start even before the 3-day training starts. And then you are also going to receive the file vault. So Chris,
we have to go a little deeper because, every time we explain this, when we have one of our mentors come in and literally they ask us, like, you gotta show more about what people are going to get. And we're just like, I thought we did. And they're like, no, show it. Great. Here's what you get. You get the cash flow inspector. What is the cash flow inspector? And I don't mean to say this, there it is. This is Lori and John's perfect loan proposal for the deal they just bought. This deal, what do you think they used? They used the cash flow analyzer. It's going to basically, here it is. It's going to show them on their deal. That's it. If everybody can see my screen, if you can't, you're seeing it on the screen here. It basically allows you to input your data from a rental or a rental you're going to lend on, and it will tell you exactly how much cash flow you're going to have. And all you need is 4 quadrants. How much income to each unit due, or just one unit? What is the purchase price, the repair cost, the closing cost? What are the expenses of the property? You complete those categories, those 3 quadrants, and boom, the financial summary kicks out. Their deal produced $277 a month, a cash-on-cash return of 13%, I'm sorry, a cap rate of 13%. The cash on cash didn't show because it was infinite, because they have none of their own money in the deal. How many of you want to learn how to buy a real estate deal, but yet at the end have none of your own money in it and be turning a cash flow that is infinite in the return? I think all of you, right? I do. And I know how to do it. And that tool right there will show you exactly how to figure the numbers out on that. So what else? And then I think the next one was my favorite, max offer formula. Oh my goodness. This little puppy here, that one little piece of paper called the max offer formula, is single-handedly one of the most powerful templates that I've ever created. Me and my wife created this. You know why? We were going to the auction buying properties, and every time we went there, it was like, oh, I'm like, holy crap, I don't know what to pay. Like, and then you end up overpaying because you get caught up in the frenzy. FOMO, fear of missing out. What's going on in the stock market? Fear of missing out. What's going on in the real estate market? Fear of missing out. People are overpaying. I didn't want to overpay. I wanted a quick reference that I could use on my cell phone or on my laptop. And I wanted to be able to sit there with all these other sharks around this little table bidding on these properties. And I wanted to literally put in 2 pieces of information. And with those 2 pieces of information, I wanted to know what the most I should pay for that property in order to be profitable was. You want to know how to do that? In 30 seconds or less, this is the tool. You enter in just the ARV. So what you'd have to have, I mean, we used to use Zillow, and that's not accurate, but that's what we used to use. We'd put the Zillow price in there. We'd put a discount rate, which is how much we wanted to discount for our carry cost. And after that, it would complete everything else. It would tell us a suggested repair. If we knew what the rental would be, we'd put them in, and it would tell us how much we should pay for the property. If we overpaid, next time, not the next training, but the following one, and at the 3-day, I'll show you a case study of what happens when you overpay because of FOMO. You almost always will come out of pocket. If you don't want to come out of pocket and you don't want to lose money, the max offer formula is the ticket. But that's I sound like an infomercial person. Right here, you want to know what your closing costs are going to be. We got to change a couple things for your city and your state. You put it in and boom, it gives that to you. What else? Spec sheet. Just like Zillow, it's a standardized template that allows you to show your deal to a private lender, to a bank. We created that. You get access to that. I mean, all these things are in here. We give you all of these in the file vault. The credibility builder, the private lending packet. That's the credibility builder. People love that. It's like a brochure in a box. You just put your information in and you got yourself a fully completed brochure that literally will wow just about anybody you show it to. What else?
Listen, I had somebody send me a deal this week. They were asking for $1.65 million. And they sent me basically a spreadsheet with like some chicken scratch on it, asking for $1.65 million.
That's just insane.
Let me ask you, if you were a lender, would you lend $1.65 million to somebody that emails you a random little spreadsheet and like 2 sentences worth of details? Or if you had somebody present this entire packet to you with every single specific piece of information, all the comps, everything, do you think you might have a little bit more success? It's the basics, guys. This is stuff that we're giving you all this included with the 3-day, and then we teach you how to use it. So set yourself up for success from the beginning. Don't do things the wrong way. Set yourself up for success from the beginning. And that's what this 3-day class is all about.
So what's it cost people? I know what they're asking. Like, oh my God, all this stuff, it's got to be expensive. Like, how much is all this crap? Whoa, $1,997. That's right. Like, that's how much it would cost. And do you have the breakdown of how that breaks down?
Yeah, so it's coming up.
Don't anybody. I'm watching the attendees. I saw a bunch of people maybe already left because they already bought. Okay, they already got the 3-day. Those are the dates. It's June 4th, 5th, and 6th. You get full recordings. Here's the breakdown of what you get. You get the 3 days, $19.97. Okay, you get the digital access to the 4-week online training. We just throw that in. Okay, you get all those tools that we just said, and then some. I didn't get through them all. And then what else? We give them the Comprehensive Wealth Builder, which is a video series, Unlocking Market Patterns. How do you know what the market patterns are in the stock market? The Money GPS Workshop. You get the Finding and Raising Private Capital. Those videos right there are worth the price alone. The Private Money Guide, the Complete Wealth Builder Kit. Then you get a free self-directed IRA setup. Horizon Trust, somebody we work with, they waive all the fees for setting your self-directed IRA up. Plus you get one-on-one consultation with the self-directed IRA expert. Good luck getting that with any other company. One dedicated person. Her name is Brandy. She's yours. Any questions? She's your dedicated person only for money school people that have gone through this. And you get a self-directed IRA education package. And if you added all that up, how much would all that work out to be? $5,100. I don't think any of you are paying $5,100 to attend a 3-day. So we reduced the price. There it is. $297, and you get all that. You get the 3-day training, you get the digital access to the 4-week online, you get the money school file vault, all those tools, the comprehensive wealth workbook and everything that goes in there, including market patterns and all those. You get the private money guide and the personal wealth workbook, and you get a self-directed IRA setup, which would cost you $350. I never thought about that, Stephen.
Yep.
The self-directed IRA, if you want to open your self-directed IRA with this company, Horizon Trust, it costs you $350 setup fee. That alone is waived and pays the $297, and you get everything else. So folks, I don't quite understand why anyone would not attend this. Oh, but wait, there's somebody on here who has a wedding or has a graduation, or, oh my God, I'm going to a pool party. You get the recordings and all of this. So if you can't be there this weekend or next weekend, great. Watch the recordings. It's $297. I don't care if you get to the recordings for a week or 2 weeks. It's the best $297 you're ever going to spend if, and only if, listen, there's some of you on here that don't care about your financial future. Don't pay $297 if you don't care. But some of you do, because some of you are the 5%ers. I hope all of you that want to create. This is your creation path. So we'll show you how to do it.
And 30 days to Money School TV. I don't even have on here.
Oh yeah, and MSTV. And that's the only time I ever pitch anything. And you know why I'm pitching this? I hate doing it. I hate it. It's like putting a knife in my arm and twisting it. I'm pitching it because you all need it. And I know you need it. And I know what we're going to bring to you by doing this. And like Lori and John, and next week, you're going to hear from Claire Charles. What it does for them, folks, will change your financial trajectory. It will change how fast you get to your destination if you know what your destination is. We want you to do it faster, smarter, and more efficiently. And this is how you do it. So folks, I don't really have anything else. Oh my God, Claire's right there. It's the best $297. I wish we would have played. Well, actually, yeah, let's play. Do you have Claire's video? We have to. We have to. So Claire is here. Claire, how many times have you been to the 3-day training? You've been around the campfire quite a few times. How many times have you been to the 3-day?
And we give you the recordings, but we don't let you come to additional ones for free. So keep in mind, she's paying for each one of these too. Free now.
The only person that probably beats Claire, well, maybe she's tied with a lot of people. I know a lot of people that are, 3-4 times, but 3 is very, very, that's awesome. And she has learned a lot. Claire, well, here, just play her video. I don't want to get too excited because I'm just so excited for her story. I really am.
Yeah, we can definitely close out after this as well. So thanks for everybody sticking around with us. We'll do a closing afterwards, but let me share this real quick. Optimize, share. All right, play. I'll
selling on Amazon alone. It took me 4 long, hard years to crack the code.
Is that a commercial?
YouTube, good old YouTube.
It's good. It means people want to see our stuff.
Hi, I'm Claire, and my life has always been service-oriented, being an educator, but not being educated in how to handle money differently than what I'd been taught. So I would say I took my first 3-day money essential course. It's such a nominal price for all the information and the fabulous people that come in and talk, because I had only learned a little bit of the Dave Ramsey way. Basically, I was just making money, paying the bills, making money, paying the bills. If I ever got a vacation, it wasn't, well, I charged it. And now I'm going to save for a vacation, which will be beautiful. And I just did $9,000 worth of dental work, some of it planned, some of it not planned. And instead of not sleeping, which would have been my routine before, I knew how it was going to be taken care of. There's no words to explain that. I mean, that almost makes me want to cry, because I thought, here it goes, I'll never see this money again. Well, that's not true. I put it in the IBC. It's just going to spin around, come right back. I knew no more income was coming in. I lost my little college job due to COVID and the shutdown that took care. And I was very concerned. I saw my assets going down, inflation going up, and I knew I was getting in a desperate place. I wasn't really kidding around. I thought I might end up in a van and living in a van. I would tell my son, I'm just going to travel in it, but no, I really thought I was going to have to live in one. I had done one really good investment, and that was this house. So I'm going to tell you that Chris said, is your house a liability or an asset? And he will also say that in the 3-day. And I went, well, of course it's an asset. No, I began to learn that you have to move your money around. Brand new concept for me. What? Move my money around? I was always taught save, 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 pay your bills. Well, he taught me about a HELOC. I got a HELOC. I have done HELOC now. It's coming home in May, but I have done it twice and made money from privatized money lending. I have learned so much, and I've continued to take them, not just once, but several times. The doors continue to open, and I see that our family wealth is now going to increase. You don't have to be in greed. You don't have to be in fear. I worked all my life. At one point, I worked 4 jobs, trying to support my son and myself back when he was in high school. And it was a tough time for us. And in fact, I had even gone through a bankruptcy a few years before that. So I know what it is to lose everything, lose all your credit. I was mortified that happened to me, but it did. And now I know many people fail, as Chris talks about, and that failure, you either learn from it and go forward, or you become stuck in that failure. And that would not be my personality, to stay stuck in the failure. It's like, okay, I'm digging out, but I didn't have all the tools for digging out, which I now do. I wish I had found money school several years ago, and Chris, but I didn't. I found it now. And in this, I can see these different streams of income rolling in, or the potential of those streams of income to come rolling in. And Andrew, oh my gosh, he helped me so much. Brent did, and Hannah, with the IBC. And I want to speak to the older people for a minute. I didn't automatically qualify for the IBC, and my sister offered to be the body, as they say, for me, so that I could get it, because I saw the value in it. And my son is in the process of getting his IBC. Again, you'll hear lots about that, the infinite banking. It's a wonderful tool. I just paid off this month. I finally was able to roll everything together, and Andrew helped me with that too. He's a fabulous guy. And I paid off over $12,000 worth of debt this month. I have gotten a couple of other people into money school, and who are seeing the benefits. One just now is going through the IBC process. So I feel like with all this guidance from Chris, who is just a guiding light for me, I hope I'm always his student. He always says, no, you can get off and get on your own. No, I love learning. Mm-hmm. So I have found it to be such, this whole year I've spent in learning, and people know, they say, what are you doing? I said, I'm in school. And Wednesdays is my big day. I do wealth webinar, ask anything. When the 2-hour coachings come in, I do that. I want to encourage everybody not just to do the 3-day essentials, which is phenomenal, but to really become involved and have a money school family. I see the same people on over and over. I'll see Mark Perry, I shouldn't have said his last name, but anyway, Mark is on, and Tim is on, and I'll see Hannah in Zodi's class, and it just makes it an experience that not alone learning this, it's really fun and it's really practical. I'm going to give a nod to Dr. Vong, because it was through his group that he had Chris come on. Now, I'm no longer with Dr. Vong's group, but I am just so committed to changing my fortunes in every way. If anybody is watching from Dr. Vong's group, I really want to encourage you to do this. Chris is definitely the real deal. And I know this because not being really savvy on the computer, getting much better now, but I didn't know how to reach him. So I called him at his home, and he was eating dinner, and he picked up the phone, and I said, this is the real Chris. I mean, I was just thunderstruck that anybody would pick up the phone. at their home, eating dinner. And right then and there, I went, he is the real deal. And he is so. And the team is the real deal. Someday I am hoping to meet Chris in person. He's had such an impact on my life and also on my son's life. And my son has said, Mom, he says, I've got all these wheels in motion now. And I said, isn't that something? I said, I just wished I'd known this a whole lot earlier. I'm going to be looking at, well, now, how else can I expand and what else can I do with the real estate that feels comfortable to me? I don't see myself going out and flipping a house. Now in private money club, and I'm going to be looking for some partners. And I know that I can go there, I believe, and see who's looking for money or whatever. But I'm looking at the pieces that we can possibly do together. And that's all due to the things I've learned here. And I keep notebooks of things that I want to refer back to. I literally have notebooks where I have got things underlined that I want to go to, and then I can find it where I want to do the tutoring and whatnot.
There it is. Oh my gosh, I love that. That, you know, those two testimonials, like they almost bring me to tears, just because I know the transformational journey that, you know, Claire and, you know, John and Lori have been on, and all the others. You know, we're very intimate about how, you know, our clients and we don't even call them clients, we call them our members. You know, we're so involved with their success, and the whole team, not just me, not just Stephen, every one of us care more than anyone will ever know about your success and about you changing that trajectory of where you're going financially, because there's not many other people out there showing you how to take back control. Everybody else wants control of your money. We don't want control of your money. We won't manage your money. We're going to teach you how to be the best steward of your money you can be based on your needs and goals. Everybody else wants to be the steward of your money because that's how they make a living. We don't want that, because nobody, I mean nobody, cares more about your money than you do. So you need to start taking back control and realize that the cavalry isn't coming. So we hope to see all of you at the 3-day event. Stephen, you want to close this out? We're way over as usual.
I love it, man. I love it. I was on the phone earlier with one of our money school members and private money club members. And she said that she just actually, as we were talking, she was taking some notes, and she said, holy shit, I just filled up my whole notebook. So she had to go get a whole brand new notebook. It was all from stuff that just taking classes and writing notes. So I love it, man. Like, I'm redoing my office right now, but I have so many notebooks too from the past, just for trainings. And so just start your financial journey somewhere. If it's with this 3-day class, we'd love to have you. But start that financial journey. You got to start somewhere, change one thing. It'll change everything. Become the bank, become a passive investor, understand money, understand how it moves. And I promise you, you and your family will be in a much better position next year, 3 years, 5 years, 10 years, and create a legacy down the road for you and your family. And that's what it's all about. So thanks for being here, and we will see you on the next one.
I love it, folks. We'll see you on Tuesday, and we'll see most of you at the 3-day event. Until then, have a good night. Thank you so much for giving us your time. And pretty soon we'll help you change time into a lot more money without you having to put your time up. So we'll see you next time. Thank you, everybody, and good night.